Hi, good morning. This is the Hyperwave channel. I'm still waking up a little bit here with Tyler Jenks. Our brief look at Bitcoin, although today we're also going to be looking at the S&P, the NASDAQ, and the Dow. So it's going to be nice and fun and nice and quick. And sorry, I have been rushing around like a headless chicken this morning. This shirt is actually a gorilla holding a dinosaur, and there's a meteor that's going to hit him because I have to go to a congressional ball tonight, so I have to like make sure that all my, that there's no adulting until semi-adulting tonight, and I convert them all into Bitcoiners. So with that said, all the silliness aside, you guys don't have to watch me do this anymore. Off we go. Bitcoin time. Ty.
Good morning, everybody. We will be doing this every day, as Leah said yesterday. And we're going to try to keep it to 15 or 20 minutes. We're going to sneak in a little bit about the stock market because I think it's very important at a lot of levels. And we'll just take a look at three quick charts there. But what we are going to be doing on this is just review what's happened over the last 24 hours. Is there anything new? And let's just go right to the charts. What I'm going to do is now we tried this yesterday and you lost my sound. So let's see what happens here. Let's do this, that, and this. And can you still hear me?
Yep, I had myself on mute. Yes, we can.
Okay, very good. The first thing we want to do today to set the stage for the next group of these that we'll be doing every morning is to step back and look at the big picture. What we're looking at is Bitcoin starting back at about $600 back in 2016, running up to 19,666, and then everything since. My interpretation has been, even before we hit that top, that we were in a thing called a hyperwave, which moves up in stronger and stronger angles until it finally breaks to the downside, retraces, but never goes back up to the top until it goes through what I call phase 5, 6, and 7. We are in a phase 7 right now. And a lot of people are getting anxious because phase 7 seems to be taking a long time. So I've shown you charts in the past that show that phase 7s do always take their time. And sometimes that means for years before it gets to where it wants to go. It is in no hurry at all. The hyperwave has done its thing, and now it slowly deteriorates over time as fewer and fewer people continue to believe in it, and more people begin to doubt it. And when that doubt finally hits a maximum, you get down to where you're going to go. So just looking at the big picture again on Bitcoin, we've had this tremendous move up on a percentage basis, on a dollar basis, but also on a time sequence basis. Most of this move from 1,000 to 20,000 occurred in 1 year, less than 1 year. Everything that came before that for the previous 9 years only made it up to 1,000 on a couple of occasions before dropping back. So 1,000 to me is a very important point. And I knew as we were going up that when this finally broke to the downside, we would be going back down to 1,000. That's not a new number. We knew that number back here because it was a phase 1 of a hyperwave. So that's the first most important thing with this chart. The second is that this chart is basically made up of two movements that you can see, one going up and one going down. And we were able to come up with a quick way of showing that by these little circles that are called stop and reverse points. Basically, the left side of the chart, all of the prices above those little circles, and the right side of the chart, all of the prices are below those circles. And that's just a quick way to get an idea of whatever it is you're looking at chart-wise. You take a very long-term chart and you just visually look at it and use common sense of what it's telling you. Then you can begin to apply various technical tools and fundamental tools to figure out why. To me, the why never is very important. It's only that the price is telling you exactly what everyone in the world participating in this asset class believes. And people can interpret that differently, but when price is going up, that's optimism. And when prices are going down, that's pessimism. One of the things that Leah and I have been talking about with all of you in our many vlogs is the problems internal to the ecosystem of cryptocurrency and Bitcoin. And that is very evident on the charts. On the charts, there's huge expectation for 10 years. And it's played out by people putting their money where their mouth and their minds are. So you have to begin asking, what are the fundamental things that are causing the right side of this chart to do what it's doing? And the obvious things are, first of all, that prices went up too quickly for what the fundamentals would support. The second thing is the fundamentals keep deteriorating, in our opinion, in terms of the ecosystem, not Bitcoin, but the ecosystem that supports Bitcoin. Because what has happened in the last 3 or 4 years is that more and more attention has been paid to other projects other than the Bitcoin project. And in doing that, it has resulted in Bitcoin being cannibalized by these other projects. Now, a lot of people that believe in these other projects don't look at it that way, and that's fine. I'm just trying to give you an overview of what this chart is telling me. And finally, what the chart is telling me, and again, we've got our 2 lines on here, 10,100 and 11,100, which are approximately the midpoint, this 10,100 of the entire move from 1,000 to 20,000. And that might be why it has become such an important horizontal line. But I mentioned that I drew that line originally on a shorter time frame, going all the way back before we even got to the top. This line was important. And after we got to the top, the line became very important, as you see here on this candle, and then very important on the next candle, and all of these candles that were trading between 11,100 and 10,100. So I think this midpoint concept is pretty important on this chart. The next thing, I'm just flipping over to a Fibonacci chart. I showed you this yesterday. This is 10,177, which is the 50% or the middle of the Fibonacci sequence on this particular retracement. It happens to be between the 2 lines that I showed you on this chart, which are not Fibonacci lines, but it comes very close to the midpoint of the 50% retracement of the Fibonacci numbers. So that's the second thing I would say. The third thing I would say is this movement under these lines, and particularly this movement recently that took us from 7,000 back up to the 10,000 line and then has failed since that, is very important, because it's showing a failure lower than the failure that took us above the 11,100 line here. Now, let's go to shorter time frames so we get a better picture of what's happened since yesterday. We'll go to a 4-hour. And here's the low at 7,026 that occurred not too long ago. I'll make this a little bit larger so we can see the highs that had occurred at 99.49. Remember, on that last chart we looked at, we came from this 6,000 area up to the 10,000 approximately, very close to my 10,100 line. very close to the Fibonacci 50% retracement line, and then it's given it all back since then. Now, what we've been doing in the last several days from this movement from 7,026 is trying to reestablish an uptrend. And I've noted over and over again how unusual it is that we get these big spikes up and then go sideways. And then we give it back or partially back, and then another spike up. These are 4-hour bars. And then we go sideways. And then we give it up. And then we go up with another big spike. We go sideways, and then we give it up. We've done that again here over the last the last 24 hours approximately. Big spike up, going sideways. Now, I noticed before that each of these highs were higher, not by much, but were higher than the ones before them. And the lows were higher than the lows before them. That has also got me thinking that these lows, which are around 73.50, are slightly higher, slightly lower than these lows, which came in at 73.80 and 73.60. So we still have higher highs and higher lows. We are now trapped in between the lows and the highs. And so I think the next direction is important. If we do what we have done all these previous times and simply go sideways and then give it back, we could break below these lows. And I think that will be very important because it will suggest that this move from 7,026 failed to get into an uptrend. If you remember, I went from negative to neutral, and I have not gone from neutral to positive on my short-term outlook. My short-term outlook was looking for us to be able to get back to 8,000 approximately, maybe as high as 8,200, until this failed again. And then I just stayed in the neutral zone. I did not turn negative. But if you think of what neutral means, it means it's not going up or it's not going down. And it's very difficult to argue that for this very long period of time, going back all the way until the 20th of May, that we've done anything other than go sideways. That's what neutral means. And I bring that up because there's confusion on Twitter about why I keep switching from neutral to negative to positive on the short term. Let me explain that for a second. My short term, which is measured in days, is attempting to find the next 5% move at any given point in time. So when I am down here and I am looking for a positive move, I'm looking for a 5% move, which would be $350 approximately to the upside. Well, when we get a $350 move from the upside, we've hit that target and I go neutral because that 5% move has been achieved. Now, from 74 or 7,500, it's a little bit bigger target of about $400. So I'm looking for about 8,000. But I'm not ready to say we're going to 8,000, so I'm going to stay neutral. If this begins to deteriorate again, I'm always making the decision from the last tick, not 4 days ago or 7 days ago or 8 days ago, but the last tick of the market. What do I believe from today the next 5% move is going to be, up or down? I don't know. I don't have any evidence other than what I just showed you with this movement. That's why I go to all these other time frames to look at things like OBV and relative strength and MACD and Bollinger Bands and moving averages and Consensio. And all of those other tools are just fine tuning my very short term 5% call. Now, I'm going to just take another minute or so to say that this technique came about when I was in charge of the trust department at a major bank where we had about $3 billion. And once a week, what we would do is I would hold a strategy meeting with the senior portfolio managers, the portfolio managers, and the assistant portfolio managers of not only my asset management division, but the trust division, two different divisions. But my investment management, asset management group, we were put in charge of the investment decisions over that trust department. So I would get all of those people together in a room. There were about 12 of us. Once a week on a Thursday, we would meet for about 4 hours, and we would go over all of our asset allocation, all of our sector work, all of the individual stocks, and everybody would have their own responsibility to report on either energy or finance or consumer durables or the bond market, the high yield market. But one of the things we always did towards the end of that was we would go around the table and everybody would vote on where the next 5% move from that day was going to take place on the S&P 500. Was it going to be up or down from whatever level it was at the moment we were taking the vote? And then a week later, we would revisit and try to figure out those people that were on the wrong side of that vote, what tools they had used and why they turned out to be incorrect. And that's a great thing for everyone to do when they're doing any kind of analysis, is go ahead and make your decision, put it down on paper or make it public like I'm doing on these short-term trades. Now, Leah and I are going to do 2 vlogs where we review all of those short-term trades going back 2.5 months that we've made public on Twitter to review each one of them and the result of that short-term trade. We'll be doing that in the next several days. We're trying to build the screen for it. So basically speaking, we are exactly where we were yesterday when we had this conversation. Nothing has really changed on the technical indicators. We are in a neutral zone right now in the short term. On the intermediate term, we are negative with the target down at 4,900. And if that doesn't hold, we have a target of 1,000, which is what I explained when we just started this particular sequence. So now what I'm going to do is I'm going to get off of my screen share, and I am going to have Leah pull up a couple of her charts.
They're up.
Very good. This first one we're looking at is the NASDAQ 100. And this is very important because I had mentioned earlier on the NASDAQ that we had what was called a broadening top, very rare, but a very powerful tool saying that maybe this 3-year uptrend is coming to an end. Based on that and several things going on with these moving averages that had rolled over and the size of these swings that we've had for the last 4 months, I actually took some money off the table on the NASDAQ. So we were only 85% invested in the stock market for our equity accounts in our fiduciary accounts that are fully discretionary by the company. That has changed now because you see on the far right of this chart that we have just taken out the old highs, and you can look at the moving averages. We've got 3 of them, a gold one that's 2 weeks, a 7-week one, the intermediate term, and the longer term is the 30-week moving average. And they are now moving up, and the price is above all three of them. So we are back into what I call a bull market. That's important. When you take a look at the other two charts that Leah has, the next one I believe is the S&P. This is the Dow Jones Industrial Average. That's fine. The Dow Jones is not as strong as the NASDAQ. The Dow Jones is only made up of 30 companies. The NASDAQ has close to 2,000. But the NASDAQ is cap weighted, which means the bigger companies affect the index more than the smaller companies. That's not true with this chart. The Dow is what's called a price weighted chart. So the price of the stock of the company, the highest ones are worth more in the index than the lower ones. Doesn't matter how big the company is, it's just where the price is relative to the other prices of the other 29 companies. In any case, this one is also looking better, but it's certainly not taking out the highs the way the NASDAQ did. So I'm still a little bit cautious on the Dow, but notice what the moving averages are doing. All we need is a couple more days up on the Dow, and we will have crossed over the intermediate term back above the long term, and the short term is beginning to move up. So maybe the NASDAQ is going to be able to draw the Dow higher. Also, it's very easy to see this triangle that started back at the end of last year, and maybe you could point to it, Leah, the highs down to the lows and across the bottom of the lows forms a very large triangle that we are now breaking out of to the upside. That triangle could have broken to the downside. It still might. But in general, this is looking pretty bullish. And let's finally look at the S&P 500. The S&P 500 looks a little bit better, as you see, because that last bar that we are playing with right now is above the last 4 bars. So it is actually breaking out. Notice that the intermediate term moving average has crossed back above the long-term moving average. And so we are back in what looks like a full-blown bull market for the S&P 500 that has 500 stocks in it. It is cap weighted as opposed to the Dow, which was price weighted with only 30 stocks in it. So a quick recap. The NASDAQ has gone to new highs. The NASDAQ 100 has gone to new highs. We haven't shown it, but the Russell 2000 of smaller companies has just gone to new highs as of yesterday. The S&P 500 looks like it's back in gear to go up from here. And the Dow is not far behind, but still hasn't taken that last step. Net, net, net. That's a very bullish sign from what I was looking at over the last 4 months. And I am back to being fully invested in the U.S. stock market. And I just wanted to quickly go through that. We will do a full show on the traditional markets probably later this week or early next week. And with that, I be finished. You're on mute.
All right, I'm off mute. It's definitely one of those mornings. Okay, right at 20 minutes. I hope that everybody has a wonderful day. Thanks so much for watching.
Great.
And until tomorrow. Okay, bye.